All right, we are back with our guest, Danielle Shay. Most of you who have seen her here on Market Watchers Live knows that she specializes in options trading. Tom and I aren't ones to cover that too much, so we always enjoy having you on, Danielle. Welcome back to the show. What have you got for us today?
Thank you. What I'm going to be talking about today is finding Phoenix. So this is my method that I use to identify relative strength names in the market. And in options trading, it's particularly important to catch those as they turn up and down. So for example, right after a market pullback, that is when I'm looking for Phoenix, those strong relative strength names, to jump on those as they shift upwards in a quick movement. This is a little bit of what we're going to be talking about today. So 5-step stock picking process, a couple of the key industry groups that I'm focused on, how to identify those on a social level, and then also on a technical level. And like you said, we're going to get back to the options trading. So I'll talk a little bit about the different type of options trades that I do. So I have been on here a couple times, but I just wanted to introduce myself again. So my name is Danielle Shay. I'm the director of options at SIMPLERTRADIng. I'm a commentator. You can see a couple of the different appearances that I've had, and I'm primarily an aggressive directional swing trader in the options market, but I do trade stocks and futures as well. So here's just a little bit about my journey. I used to be a teacher. Here's a picture of me teaching elementary school in Costa Rica. And now at this point, I'm a stock market analyst. So I love teaching. I've always been a teacher. I'm still a teacher. And that's what I'm here to do today. So let's go ahead and get into the Phoenix Folio. The Phoenix Folio is essentially my baskets of hand-picked stock list, and I kind of shift through them depending on what the overall market is doing. So why do I call them Phoenix, and why do I call it the Phoenix Folio? So similar to what we talked about earlier, the Phoenix is the bird that rises from the ashes, right? So whenever the market pulls back, slight pullback, or even a more significant correction like in December, what I'm looking for are those key stocks that are going to immediately rise out of the ashes, because those are the ones that you want to jump on first. So I like to call them Phoenix. So like I said, you want to be able to catch the stocks that are rising as they're rising and falling as they're falling, but you have to pick the strongest ones to the upside and the weakest to the downside. So essentially right here, this is going to be my grid for how I go about finding Phoenix. I always start here with the big picture outlook. I always look at the S&P, NASDAQ, the Dow, and the Russell futures to determine overall price action. With Phoenix, what I like to do is focus on the indexes that are the strongest. So for example, if the NASDAQ and the S&P are rallying, then I focus there. If in fact you have the Russell, then I'll focus in that area. And so I just basically start here and then I go on down. So depending on what I'm trying to do in the market that day or that week, I determine how aggressive I want to be. So oftentimes I will just go ahead and stick with ETFs. I'll just add them to my long stock portfolio, or I'll trade options on ETFs. But sometimes when the market is really strong, then I like to stick with the Phoenix flyers, which are the hot industries that typically are going to move at a greater than what the overall market's doing. So like you were talking about the semiconductors earlier, that is one area that I like to focus on when we have a strong bullish market. Cloud stocks as well, these are very hot. They can be very volatile, but in the options market, that's really what we need to capitalize on long calls. And then I also have some handcrafted lists that I've come up with that are kind of the social aspect. I think I need a better name for this, but essentially what it is I look at the ways in which generations are spending their money, right? Especially looking at millennials. Everyone loves to hate millennials. But if you think about, okay, what do millennials blow their money on? That is where that list comes from. So we're going to get a little bit more into that. But essentially, what I do is I start at the top, look at the strongest indexes, and narrow it down to an individual sector or industry group. Look at money flow. So I'm trying to pick the strongest of the bunch within that individual group. And then I pick the stock at the very end. And then I'll either trade it with options or, whatever I feel like at that moment in time. So these are a couple of the main groups within my Phoenix Folio, and I'll talk a little bit more about each one. But like I was saying, I shift through these different lists depending on what the market is doing. All right, so essentially I start with the top down, like I said, and my grandma loves it list is a place where I have to start every single day. Essentially, what this list is companies that everyone knows and loves, really common, popular names. But the reason why they're compiled together in this list is because they're some of the top weighted and market leaders from a variety of different sectors. And so when you look at all of them at the same time, you have a representative group of the overall market, as well as a couple of the different sectors. So, of course, you have tech, communications, discretionary, industrials, so on and so forth. And so these are my favorites to trade within those spaces. And looking at all of them at the same time just gives me an idea of what the market's doing that day and which sector I want to jump on and focus on that week. So the next part of the Phoenix Folio is the millennials buy it or the millennials love it list. Either way, it's, call it both. But millennials, I mean, we spend a lot of money on entertainment, online shopping, e-commerce is huge, travel, coffee, used vehicles. And so you have to think about that and say, okay, well, what does that mean for our portfolio? What does that mean for different picks that we can potentially look at because of the way that generations are shifting and adjusting where they spend their money? So here are a couple stocks from my millennials list. And if you just go through this list, it's important to understand that I don't just buy and hold all of them at the same time. As an options trader, what I do is I maintain this list, and then when they pull back and when they consolidate, that is where I will get in for an overall breakout. So a couple of these, PayPal, this is huge, payment processors. Obviously, there's Venmo. Venmo's growing. Etsy is one of my favorites. Etsy and e-commerce as a whole is huge with millennials. Freshpet, I think this is funny because, I mean, statistically, millennials do spend a lot of money on their pets, and especially natural food, organic food, and Freshpet. This company makes refrigerated dog food that's natural. And if you look at a stock chart, it's really nice, beautiful trend. It's about $45 or so. So I do actually own that one, but I like to trade it in the options market. And I'm not going to spend time going through all of these, but it's just the overall theme that I look at. And then I narrow that down to what the technicals of this chart actually looks like, and then look at the fundamentals as well.
I see Starbucks on your list. So that means I must be a millennial.
Yes, Starbucks is a great one. It's very strong within the consumer discretionary area. And then, of course, coffee is great.
Yeah, that's a no-brainer for sure. There were a couple questions that came in. One was, what time frame are you using when you're reviewing sector results? I think you were talking about, trying to differentiate between the strength and the weakness. And so when you do that, are you just looking at the last week? You looking at a month, a year? How far are you going back?
So typically the largest time frame that I use is a daily, just because I'm a shorter term trader. Usually my trades will last maximum 3 weeks at a time. So primarily I use the daily chart, and then I go down to the 30 and 78-minute charts to determine when there's a major shift in pattern or for an entry.
Okay. Another question or a statement. With options, I never feel comfortable that I am not overpaying, since the volume of trades on an option can be low. So they're wondering your thoughts on that comment.
Definitely. So, I mean, the main way that I determine how much I'm going to pay for something is dependent on the overall market condition, where that individual ticker is trading. So, for example, in the options market, I always want to get an entry around the 34 EMA on a daily chart. Typically, if you're getting into a trade when the ticker's extended off of the 8 EMA, then you're paying too much, because my stop is always going to be below the 50. And so if you buy it when it's extended up off the 8 EMA, then your risk area is much, much larger. And so for me, that's paying too much. It's also easier if you can do it after a down day, 2 down days, then you're going to get a much better price rather than when something's going bid. I also won't buy something if it's up more than 2% on the day.
Okay. One other question that just came in, and I don't know, this one might be difficult to answer in a short period of time, but the question is, what option strategy do you use most, from long calls, puts, call vertical, strangles? And then the follow-up question was, can you walk us through one of your setups? But at least maybe the first question, if you could answer, do you normally trade on the long side, just long calls?
Sure. So that is actually, I have a couple slides on that at the end of the presentation.
Okay.
Where I do have an example as well. But just to answer quickly, it depends on the overall market conditions. So when the market is strong to the upside, only long calls usually, because that's the best way that you can make money. But when the market is a little bit more volatile, like it's been for the past 6 weeks or so, especially with the overall macro backdrop, lots of tweets, everything like that, then I stick with more conservative strategies, spreads, and butterflies.
Okay. Sounds
So this was a group that you were talking about earlier: semiconductors, cloud kings, cybersecurity. These are all some of my favorite areas to focus on when the market is just flying, because those are the ones that they're the ones that are flying as well. So the next piece of this is just looking at the cloud and the way that technology is shifting. Everything is shifting to the cloud. It's not going away anytime soon. And looking at this chart, you can see the way that it's projected to continue growing. But at the same time, I mean, that doesn't mean that every single cloud stock is a good pick. So here are some of my favorites from, I think this was last week, but I mean, they're still some of my favorites. And in the options market, I love to buy them whenever we get a pullback. And then I also hold long stock in all of those as well. The next area that I'm looking at, and I think I need to come up with a better name for this, but it's essentially looking at the debt bubble. So right now we have some of the highest levels of consumer debt that we've ever had on record. There's mortgage debt, there's auto loan debt, there's student debt, there's credit card debt. And so you have to think about that and say, okay, who's making money off of this? Well, in the age of e-commerce, you can't pay with cash. If you look at a chart of MasterCard, Visa, American Express, those are just continuing to expand, and I don't think it's going to stop anytime soon. A couple other ones that aren't exactly in the same space, but you have companies like PayC, PayX, you have online payment processors. Also, companies are going to just, I don't know what you call them, but they're online management systems where your paychecks are getting managed online, your health insurance is getting managed online. We use ADP at our company, but I mean, if you look at the stock charts of those, they're doing amazing. So that's the next area that I like to focus on. And this is really where we get into some examples. So essentially, I start with my list. I have about 15 different lists. Those are just some of my favorites that I wanted to highlight. And then what I do is I use those for a watch list and then narrow them down to get into actual trades. So this is what we call a setup. Really just looking for a technical entry point that will provide a good entry. So as far as comparing these stocks, what I do is I compare the strength of the trend and then I compare those stocks against each other, because what you're trying to do is you're trying to pick the strongest of the bunch. So even though I have 15 cloud stocks on my list, I want to find the one that is the strongest out of that list. And so this is essentially the tool that I have created to do that for me. I can still do the process manually as well, but this just is much quicker. So really all that it is I'm looking at the strength of the trend, which is determined by the moving averages. So whenever you have stacked moving averages, this is the 8, 21, 34, 50, and then I have the 100 and the 200 as well. So whenever you have stacked moving averages and then you have price above your moving averages, that's indicative of a strong trend. And so what this does is it just takes right here, the candles are green because you have stacked moving averages, you have price above the moving averages, and then it also looks at the alignment of the moving averages as well. So the green is telling you that you have a strong bullish trend. And then what happens is as the price starts to pull back, you get the warning sign, which is the yellow candle telling you, hey, there's a shift coming. And then the red is indicative of a pullback, or sometimes you'll see a shift into a bearish trend. But on this chart in particular, it's just a pullback. So I like to use the 78-minute chart to identify pullbacks. And then this is my Cloud Kings list. And so what you're doing is you're just pulling this data and populating it all down here for all of these charts at the same time. So then that way you can see the way that the trend is shifting on a technical basis on multiple stocks at the same time. So whenever you get a market pullback, you say, okay, well, the SPX is pulling back. I know I want to buy a cloud stock because the market's strong, but I want to buy the one that really only lost a little bit of strength and then rallies, because that is the Phoenix. And so when you look at the list, you can say, okay, well, now is really strong. RHT, that screenshot was from a little bit ago, but same thing with VMware and WDay. And then I also like Adobe. And so really this is just like a comparison grid. And then I go down to the individual stock chart for my actual entry. But here's just another example as well. This is the Grandma Loves It list. And so just looking at this real quick, I mean, you can see the SPX is pulling back. Okay, everything's pulling back. So what is still strong? What is still maintaining a strong technical trend? You've got O'Reilly, American Express, and actually Coke right there. And so then I just go down to this individual chart and look for an entry on a pullback buy. Here's just one more list, same thing. You can see the overall pullbacks, and then you can see the rally. And then I go down to the individual chart. So cyber, this is one of my favorites on the cybersecurity list. And I can see the strength of the trend within the tool. And then I come back to my actual chart to look for an entry point. So that right there is the overall process. I start with the Phoenix Folio. I look to identify the flyer, which is just the one that is starting to rise after you get one of those market pullbacks, check my technicals for a setup, and then I trade it. So I know I'm running a little bit short on time, but this is the part where I get into the trading setup. So I'll just go through some of these examples a little bit more quickly so that I can get to the options part. But here are just some of my favorite Phoenix stocks. And like I said, I just look for the shifting of the pattern on the lower time frame for entries. So Adobe, like you were talking about earlier, looking forward to Adobe's earnings. Got PayPal on that list as well. So essentially, I mean, in the options market, every single one of these pullbacks are great opportunities. And then regarding your question earlier, what do I like to do? Long calls, butterflies, spreads. So essentially on pullbacks, I love selling put credit spreads, premium here, here, here. So I like to do it around the 34 EMA. And then in a market situation that's a nice directional trend like this is completely fine for buying long calls. That is great right there. Something like this in this type of price movement, that is when I would stick with butterflies because they're cheaper and they maintain their value better through volatility. But in something like this is long calls. So you can do the same thing with this chart. Whenever you have price that's below the moving averages like this, it just tells me that I need to be a little bit more cautious. And during this area right here, this is completely fine for long calls. Put credit spreads on the pullbacks to the 34 EMA.
Where would you set your stop on something like that? When you see it in an uptrend like that, is it one of your moving averages or is it a prior price support level? What do you look for as a sign to, hey, I need to cut my losses here?
Yeah, so usually I use the 50-period simple on the daily chart, and then sometimes I'll couple that with the previous low as well. So for example, right here on AXP, if I did want to get into it right now, which I wouldn't because it's all the way up at the 8 EMA, so that's a pretty aggressive entry. But I would have to have my stop below the 50. And since this previous low is right there, I would actually let it go until about here. So that's why in the options market, I was saying when someone said, hey, how do you know if you're paying too much? Well, the thing is that if you're buying a long call right here and your stop is all the way down at 108, that is far too much risk to take in the options market because you are basically let's see. So you want to minimize your risk as much as possible, right? Because options are so expensive and volatile at times. So if you get in right about here, right about where your stop is, then your risk is actually quite small and the stock is going to move on a normal basis in that area. So the problem is that if you get in at the 8 EMA and it reverts back down to the 50, that's just a normal move for the stock and there's no reason for you to stop yourself out. But because if you bought, a $10 option up here and it goes down to $2 down here, then obviously you're probably going to panic on that. Well, we try not to, but so that's why you really have to work on your entry.
Okay. And you mentioned Adobe earlier and earnings coming up. If you see relative strength on an intraday basis or leading up to the earnings report, does that give you the confidence to place a trade heading into, would you hold options going into earnings or is that too risky?
So we never advocate holding long calls through earnings because of the vol crush. So the way that options function is the IV of the options is a huge piece of the actual pricing of the option. And so the IV rises going into the earnings report. And then what happens is after the earnings report is over, the IV gets crushed, or we call it the vol crush. And so the price of your option is going to go down unless you have a huge move. So typically when I trade options, for an earnings report, what I do is I sell premium because I want to take advantage of that vol crush. And then the other piece of that too is, and this is the presentation that I used the last time when I was on Stock Charts TV, but I always trade the run into earnings. This is one of my most profitable times in the options market every quarter is trading the run and then getting out before the report.
Okay, so as taking advantage really of that increasing volatility.
Yes. So if
Okay.
you look at relative strength names, and usually I'll look to buy them about 2 to 3 weeks in advance of the earnings report. And then if you time that with a pullback, like I was explaining on the other charts, then you get a rise in price plus a rise in IV. And so it's working in your favor times 2.
Okay, cool.
So the last piece of this is just talking about the different ways and the different option strategies that I like to use, as well as, stocks and ETFs. So I do maintain a long-term stock and ETF portfolio, and then I have a directional options account. And so when I'm typically trading options, usually I will stick with Delta 70 calls. What that is just basically an in the money call. And those will hold their value the best as the market is trading back and forth. You can also buy cheaper ones that are out of the money, Delta 40, Delta 30. Usually the only time that we do that is the run into earnings, because you have a price and IV increase working in your favor. But for the most part, I stick with Delta 70 calls, butterflies, and spreads. So here's just a couple comparisons. But I mean, basically, the entire reason why I use options is for the leverage. It's for the leverage, and then it's also because you can define an exact amount of risk, particularly with some butterflies or spreads. I mean, you can trade pretty small and be able to normally I focus on 1-to-1 risk reward, or with a fly, I mean, you're risking 1 to make up to 4. So for me, that's a pretty good way to use leverage. And here are just a couple of examples of option strategies that I will use. So one positive thing about the options market is that you can just trade neutral moves, especially in a week like this week, options expiration. We do primarily focus on neutral moves. And the way that we do this is you're able to sell premium right about here in the middle. I could show you an example of my Netflix trade if you wanted. But as the market is kind of just chopping back and forth, you are able to take advantage of that in the options market. For me, I like a little bit more excitement in my life. So I primarily focus on directional trades, breakouts, stuff like that. So long calls, debit spreads, credit spreads, butterflies, and unbalanced butterflies. And then you're just determining this based on the risk. So if I had a little graph right here, these are going to be the most risky, kind of a medium, lower risk, and butterflies are pretty low risk. So, and then here's just a little bit more information about my favorite directional strategies. Is that the answer to the question that someone was asking earlier?
Yeah, I think it certainly is addressing it. I think I think the one question was, which types of option strategies you use, which I think is addressing that question. The other was walking through your setups, and I think you did that on a number of.
Oh yeah, and I can go to my live charts too. Yeah.
And by the way, this was a great presentation. I think, we don't really talk too much about options here on Market Watchers Live, so it's always a pleasure to have you on the show
to
help educate me and a lot of our viewers as well. Yeah.
Well, here's just my last slide for you, just about where to find me. I'm from Simpler Trading. I have a newsletter, classes, and we also have memberships as well. So,
all right. Check it out. There it is on your screen, and you can always come back and check out the recording later. But Danielle, always a pleasure to have you on the show. Can't wait to have you back.
Thank you.
All right. And there Excellent. She goes.
The point of on trend is to keep you on the right side of the trend. Mostly dealing with stocks and ETFs, I'm going to point out bullish setups on stocks and ETFs that are in uptrends. I'm also going to look at some downtrends, but those are designed also to tell you which stocks and ETFs to stay away from. The main point is to stay on the right side of the trend, the uptrend.